Morning traders, how you doing? This is the 0DTE morning market analysis where we take a look at volatility, market direction, and entry events to place our 0DTE trades out of the money, asymmetric trades where we're trying to reduce our volatility of returns and maximize the return on the capital that we put to work. And today's focus is going to be on the Fed. Today's Fed day, FOMC minutes are released, and you got to be ready here because it could be flipping the script. The Fed is talking about having 2 more rate cuts this year as opposed to previously where they were talking about 1. And that could potentially mean a lot more volatility on the horizon. And hey, from a options trader's point of view, that's exactly what we want. So let's get into the analysis, and I'll talk a little bit more about this idea of 2 rate cuts and what it could mean to us. Let's get to it. Here's our market report. Well, that's not what I want to show. Well, it's part of what I want to show, but not initially anyways. We need to go to our first step, and that's looking at volatility. All right, here's the VIX. Every morning we take a look at the VIX and figure out whether or not we have a healthy market to push into. And right now we're in Zombieland. The Zombieland, you know, that's where there are zombies chasing you and you're running through mud. You can think of the zombies as the FOMC, the Fed, Chairman Powell, lead zombie. All right. The VIX is getting down there. It's pretty much remaining steady for the past week or two. We're looking at 15 to 25 wide flies. And we want to zoom in on that, and that was the previous screen where we looked at the big ass fly. It is remaining relatively high, meaning that while the Fed is talking about rate cuts and there's this potential for a volatility explosion, the reality is volatility is super low, and the premium, the rate of decay of premium, has accelerated dramatically, meaning that right now there's just not enough meat on the bone. And you know, zombies, they like brains, right? No. Well, if they were going after meat on the bone, there ain't much there, and they're going to be damn angry or hangry. And I'm going way off the script here. But anyways, we're looking at 15 to 25 wide. Let's take a look at the big ass fly so we can whittle that down a little bit. And we can see that, man, with this low volatility, what that causes is an acceleration of decay, and that means in this big ass fly that is reflected by very little potential profit in this trade. And right now with a debit of around 30, that's pretty high debit, meaning very low volatility. There's no chance in hell or in Zombieland that we're going to be taking the big ass fly as a trade this morning. And really the only market event that's going to appear on the docket today is at 2 p.m. this afternoon when the Fed releases their minutes. So let's go back to the VIX. And we can see that using our guide up here at the top, we're starting to move over to the narrow fly end of the range, and so we're really talking about 15 to 20 wide. Why are we going so much less wide when we're talking about FOMC minutes today? It's because the market really isn't pricing it in yet. It's all potential on what might happen later on today. What's the direction that we're looking at? Well, I would say that we are still in an upward bias. Well, you can't really tell from this chart here, but if we go here, you can see that we are moving up and up and up and up. And in fact, it looks like we're creating a, I don't know, you would call this an ascending triangle. Let's see, let's just draw that. An ascending triangle. That's typically a continuation move. Most people would say that that means that we're going to come to some sort of crux, and it looks that way. We're getting very close where there's going to be a breakout. Now, you can have a breakout up or down. We don't know. But there is some sort of conclusion coming to a head. And now the last part is looking at our entry points. And we're looking, let's see, I got to draw in my 9:30 to 12:30 time frame right here. And this is the, we're sitting on top of this node. There's one more node that's above us, but that's going to provide good support. So what I'm I'm looking for entries today are, what's that level there? About 61.36. Also potentially pull back to here to the bottom of the node, find good support at 61.26, and maybe we'll get some pre-market movement and then pull back here to 61.47. So about every 10 points here, we have a potential for a market entry event for today's trade. All right, now getting back to the focus for today, and that's the Fed. You know, it's kind of ironic. Everyone's expecting a more dovish policy, and that should ease tensions. But here we are seeing the potential for wild volatility. I mean, the very signal of 2 rate cuts has traders on edge. And that's causing that can cause unpredictable market swings. And for 0DTE traders, that's what we love, because we can exploit that. But right now, we're just not there. This is kind of like the lull before the storm. And so while the Fed is moving towards a more accommodative policy, which is meant to calm the economy, it's actually stirring up this uncertainty and volatility. So we'll have to see. Now, there are other rumblings that are showing a change in sentiment underneath. So according to the Orbex analysis, the FOMC minutes now include language suggesting several policy makers see a need for 2 rate cuts. They've been talking about 1 rate cut, and that's been upsetting a lot of people, but now they're talking about 2. So we'll see what the language is in those meetings and whether or not that is an actual shift in tone. All right, let's go back to the big head. Enough about that. I mean, this is all speculation, prediction. We don't know really what's going to happen. But that shift in tone, the shift in language in the minutes could really stir things up. At least that's what we're hoping, because until they are stirred up, we're preserving capital. We're shrinking our exposure to the market because there simply isn't enough meat in the bone. We're starting to look at edge case strategies like the time warp, which means that we go to multi-day DTE. As a preferred strategy. The day is just not enough for us to sustain. We need to try to recapture that accelerated premium that has happened in previous days by going 1 DTE out. So Wednesday we'll look at 1 DTE, DTE for Thursday and Friday. It would be 2 DTE. We don't generally go over the weekend. All of this could actually change depending on what the FOMC reports today. But we'll see. As it stands now, we're hunkering down. So there you go. That's the market report for today. Thank you very much. Happy trading. Coach Ernie out.